Maya, this has sort of opened up discussions before now that perhaps there are more talks about what to do once the Fed actually gets to that neutral rate. But that all hinges on them actually knowing what that neutral rate is, right?
Yes, absolutely. And I think something that I find quite striking is when we look at what the Fed tells us that they're going to do, a couple more hikes this year, 3 next year, and you look at where markets are. Markets are still quite meaningfully more dovish than the Fed even before we get to that neutral rate, right? So we're 50 basis points below where the Fed median dot is for next year, 70 basis points below for the year after. And so I think when we look across the curve, markets do look to be meaningfully more dovish than the Fed. And I think when we add up, I had a look this morning, and the Atlanta Fed nowcast is at 4.8%. That's the sort of speed the U.S. economy is growing by. Inflation is on target. Wages are picking up in line with a pretty tight labour market. And so that path of rates that the Fed is indicating does seem justified to us.
Yeah, and Larry, to Maya's point, should the markets actually be repricing a little bit, or actually does Jerome Powell's statement yesterday show that it's okay that they're perhaps a little bit behind the Fed's outlook?
Fundamentally, I think that I would agree with Maya's statement. In other words, that the markets are probably being too cautious about what the Fed will deliver, not just this year, but also in the course of 2019. But it's not probably the time for that repricing to take place. If you look across, say, research produced by the sell side and by others, more and more of it's beginning to focus on downside risk to growth later this year, stemming largely from trade conflict and the adverse spillovers that could take place to corporate spending. So I think the market is still going to be on its heels with regard to making that adjustment. In the fullness of time, I think the Fed will probably deliver something closer to its dot plot, and the market will catch up to it. But tactically, it's probably not the time to be thinking about, for example, shorting duration.